What's going on, guys? Ronnie here, your local realtor. I got John here, an excellent mortgage broker in the field of real estate, also an investor, acquiring multiple properties. I don't want to say much, brother. Introduce yourself to the people that are watching, and let's get this started. Wait a minute. Unmute yourself on Zoom because this is recorded. Unmute yourself on Zoom because this side is recorded. You could
All right.
just mute the Zoom
Good
though,
now?
if you want. Yeah,
Okay, perfect. Sorry about that. Technical
I was good. I was
difficulties. Still
good.
getting familiar with Zoom itself. So, hi, my name is John Soto. I'm a loan originator in the state of New Jersey. I've been investing in Jersey for about 3 years now, which led me into the mortgage business to help people around me build generational wealth. Because real estate itself is a powerful vehicle to begin generating wealth, and it could be passed down to generations to come.
Generational wealth, man. I like that hashtag, brother. So obviously you're a family man. You have a few kids of your own. You just told me in the age of 4 and a couple months, or 1 year,
One.
1 years
Yeah,
old.
she's 1 year
That's
old. Yep.
awesome, man. So at this moment, you are already in the investing side of the business for 3 years, and just talk about um, really fast, and talk about your first deal, and then how many units have you acquired in the 3 years? So we could just sum that up really quick.
Perfect. Yeah. So the first deal I bought it with a FHA loan, which many people don't know. You can buy a multifamily up to 4 units with an FHA loan, and I put as little as down as 3.5%. So that first deal, I bought it in December of 2017. It was a three family. I lived in it rent free. I've been, I would that allowed me to save up for the next unit, which is in the missus name. So since we weren't married, I bought a FHA multifamily in my name. Then we bought her one in her name, a three family, and then that was in 2018. Well, let's not jump around. That was my first deal, December 2017. Bought a three family with an FHA loan.
Nice. All right, so there you go. I mean, that's some common knowledge about FHA loans that people don't know about. So you said you can purchase a maximum of 4 units, you said, with
That
the
is correct.
FHA loan putting 3.5% down. So people are feeding over this first time home buying program to buy their single family house. How much of a difference would you say buying a single family home versus a multifamily unit now, and possibly having being that choosing that as your first time home purchase, a multifamily home, and possibly in the future using that profit from your investment property in order to actually purchase a single family home mortgage free, technically, right?
Yeah, definitely. So basically, a lot of people don't know. People always want to get their dream home first. But a lot of people don't know if you use FHA for a single family, you can't go backwards. You can't go to a two family. If you use FHA first time home buyer for a three family, you can then refinance into conventional and buy a two family after that, or possibly a one family. And you can use the rental income from the multifamily to help you buy your true dream home. You'll be able to qualify for more.
There you go. I mean, obviously, it's great to dream about your first single family home as a family, cherish memories and so forth. However, in this world, as we see right now, what kind of world we're currently living in, we have to secure our money in all ways, shapes, or form. We have to make our money work for itself, not work for the money. So let's switch over really fast into the mortgage aspect of business, because I've heard your story on Austin's podcast. Shout out to Austin Smith, man. That's my man right there. And I've wow, really inspiring story, bro. The way you got into the mortgage industry. Now, let's talk about how do you get in it, and then after that, we're going to talk about some things we can think about during times like this.
So to get it to be a mortgage loan originator, you have to take the course within your state. So it's I believe it's 25 hours. I took it on a weekend. It was 4 Saturdays back to back to back. I studied my ass off right after the fact of the actual mortgage class, and then I went to take the state test. That was pretty difficult, but I used a lot of online videos, online tests, samples, and that helped me pass the test within the first try.
Oh, nice, man. So there's only 25 hours. Real estate, it's 75 hours. So there's obviously it's much easier to
Yeah.
get into the mortgage license than real estate. I didn't know that. Okay, so you got that. You started off, I believe, you was doing it not only for yourself, but you had an experience when you was shopping on your own. The mortgage lender wasn't providing you the service that you thought a professional was supposed to provide you. So you got into the industry and started helping your family and said, I can do this job 10 times better than the person I was just working with. So we can drift from that really quick. Something I believe is crucial, especially in this time right now. How are the rates looking, and what advice can you give people who are really interested in buying now or quote unquote in the future?
So rates are amazing right now. We're in the mid threes. They keep jumping up and down, but average mid threes. If you still have FHA guidelines are getting a little stricter due to everything going around. So before you can qualify with a minimum score of 580. Now they're getting a little stricter. The minimum score is around 640. A lot of lenders are tightening up their restrictions and their guidelines. So I would say to people, if you own a home right now and your interest rate is above 4.5, refinance 100%. And for the people that want to buy a home, if you still have the job security and are an essential worker or able to work remotely, then this is definitely a good time to buy as well because the rates are great. There's less people possibly on the market. You can possibly get a better deal or get an offer accepted that you possibly were not able to get accepted before because of the competition. They're raising up the prices and things like that. So if you definitely have income, a secure job, I would say definitely is a good time to purchase a home.
Yeah, man, absolutely. Okay, so rates are fluctuating right now from 3.5%, from 4 to below 3.5, and is all over the place, obviously, with everything going now. Now, you said something really important. I just want you to repeat that once again. You said if someone has a interest rate above 4 or 4.5% roughly, that they should really finance at this time, just because they should take advantage of an interest rate being at its all-time lowest, at least on average, right?
Yeah, that is correct. So if it's above 4.5, I would say definitely refinance. If your credit score is up to everything's good with your credit score, everything like that. I just refinanced my brother actually. Uh, Last week we just closed and he's saving a good amount of money on a monthly basis because his interest rate dropped significantly.
Oh, wow, that's what's up, man. So it's always good to be in the business while helping out family members and people that you love, and you
Hmm.
know that it's actually benefiting them in the long run, because now you feel good about the job that you're actually doing, right? You're actually really providing
Hmm.
a service and saving money for
Hmm.
people who you care about. So let's say if I have a mortgage, $300,000 mortgage for 4.6% interest. Can
Okay.
you just
Okay.
walk me through the process more or less? Like how would I just walk me through that process?
Okay. So if you have 4.6, depending on the taxes, you're probably paying 2,700, 2,800, depending on the taxes. And if we drop that to, let's say, 3.5, that can drop $400 a month. So you're saving 3,000, 3,600. I'm just giving you rough estimates at the top of my head. But with the
Yeah.
process itself, there's different ways you can go on a refinance. So let's say you purchase your home with FHA 2 years ago and you're at a 4.65. You can do a streamline FHA refinance, which basically means your mortgage doesn't really go up. we don't verify any type of income, and you only bring your mortgage payment now to closing. So let's say your mortgage was 2,600 or 2,700, and we started the process now. We can close before the end of the month, and you only have to bring in that 2,700 to closing, and then you can refinance into a lower interest rate, and there's no appraisal needed.
Wow. So, okay, so you call it if they currently have an FHA loan, you call it a streamlined FHA refinance, I'm guessing. And then
That is
from
correct.
there, you said they don't verify income. Now I'm just curious why is that?
Because if you're good standing with your current mortgage company, we actually review that as well. We run your credit to make sure you're not no late payments or anything like that. That means you can still qualify to make those payments. So when they did the original process 2 years ago, when you purchased your home, they did all the income verification and everything like that. So we
Yeah.
just basically moving the mortgage from one company to our company and bring it down your rate.
Gotcha. So basically, just to sum it up, because I assume that would be a question from the viewer side of this
Mm-hmm.
screen, like why won't they verify income? However, the mortgage statement, enough, the background of the mortgage payments collected over time is proof that obviously you have a great, good income that's verifying that you can pay this mortgage statement. So once you bring that, you just have to bring, let's say the mortgage was 2,700, you just have to bring that to the table, pay that, and you are transferring your mortgage to another mortgage company, lowering down your interest, and now you're saving 300 to 400 bucks a month, right?
Depending on the scenario, but that specific scenario you mentioned, yes.
Got it. Okay, obviously, yeah, these are just numbers that we're playing with. That's awesome, man. I mean, 3 to 400 bucks, you can, I mean, if you multiply that by 12, that's basically 4,800 bucks a year. That's almost five thousand
So
dollars that you can use for something else.
what I would correct, what I would recommend to people that actually go on that route, they can act like you're still paying that higher mortgage, put that money to the bank, or pay down the
Principal.
principal, and you could pay off the mortgage faster.
Yeah, absolutely, man. And wow, this is a great segue because I know there are some tricks and tips in lowering down your principal, uh, let's say lowering down the 30-year fixed rate, excuse me, the term,
Mm-hmm.
right? So I heard there's some
Mm-hmm.
tricks of lowering down the principal, either paying double the mortgage at the end of the year, at the 11th or 12th year, or something like that. What are some things that you know about that?
So basically, if you do an extra payment to principal, let's say your mortgage is 2,700 a month, a lot of that is going to taxes, insurance, some of it is going to principal, some is going to interest. But if you pay that 2,700 towards principal only at the end of the year, so one more payment towards principal, that will save you a lot in the long term. So you will definitely drop down half or more than half in the term of the mortgage itself.
Got it. Okay, so at the end of the 12 months of that year, at the, let's say, December, you pay an extra payment just towards the principal. And let's say, I know that knocks off, I think, a few years of your 30-year term, if I'm not
Yes,
mistaken. Do you know that
that
exact
is
math?
correct. I don't have the exact math in front of me, but it's I believe it's half the amount of years, or maybe more. I'm not exactly sure the exact
Gotcha.
knockoff.
Yeah, that's a great strategy. Let's say if you have a three-family home under your belt and you want to
Mm-hmm.
purchase
Mm-hmm.
a single-family home, and the profits from that three-family home, you can actually pay that mortgage, and then instead of dumping more money into the property or paying a mortgage, you could just, whatever money that you have, you could pay towards the principal, and next thing you know, you have a
Mm-hmm.
home that's outright
Mm-hmm.
owned under your name, single-family home, and then you also have an investment property that's consistently giving you that cash money. Now that's
Mm-hmm.
generational wealth, and that creates freedom, financial freedom. And let's talk
Mm-hmm.
about financial freedom, by the way, because I've heard a definition of financial freedom that I like a lot. What is your take on that?
My definition of financial freedom is living life on your own terms. You don't have to worry about anything around you. The world could come crashing down like a lot of people now, and you still living comfortably.
Yeah, there you go, man. So I like that explanation, and I want to paint this picture in people's head. When people say financial freedom, it's not about having $1 million in your account. It's not about being rich, about being a millionaire. It's about being financially free of your bills, having your assets pay your bills, and still having some sufficient amount of funds in your account and not having to worry about your bills. That's being financially free. So
Yep,
let's say if your
that is
bills
correct.
are $1,000 a month, but you make $5,000 or $10,000 a month consistently, then technically your expenses are so low you don't have to worry about your bills. So in that aspect, you're financially free. You don't have to be rich to be financially free. So once I heard that, I'm like, wow, that makes much more sense, because there's a lot of people out there that want to be financially free, but they just think that definition is just being rich. And I feel like that's
Mm-hmm.
very incorrect, because once people see that goal of being rich, they see it so far-fetched and they are afraid of it, because obviously it takes a lot of work to get there. So yeah, I like that aspect. Now in the
Yeah,
time
that.
span, I would like to ask you a few more questions just to not make this too long. So let's say, me personally, I'm working with a few clients who are worrisome of this uncertain situation that we are currently in. I don't want to say the words because I'm going to put this on YouTube and I don't want them to flag me. So yeah, in this current situation, we are at an uncertain time. What advice would you give a buyer who is interested to purchase in this current market?
So the advice I would give is, if you have a job that a lot of people already got laid off. So if you still have your job and you have that job security, this is definitely a good time to buy. If you don't foresee your job closing down or anything like that, then 100% move forward with the purchase. You're gonna you have more inventory to yourself because there's less competition out there. The rates are amazing. We don't know if the rates are gonna go up after everything settles down, because this will pass. Like everything else before us, this will pass. So take advantage of the rates right now, because we don't know what's gonna happen after this.
Got it. Okay, so what I got from that is, if you have a secure job, obviously, which most people should focus on, having something that's secure. They have a secure job. They are at a advantage right now. The rates are absolutely amazing at an all-time low, and there is less competition right now because, one, people, unfortunately, are losing jobs. They're not in a secure position. So if you are in a secure position, or let's say if you're a cash buyer, this is your time to invest as well, because the competition right now, it's it's very serious. Whoever's on the market right now, especially, are serious buyers. Any person that I'm working with currently, I'm actually really happy with right now, because there's no beating around the bush. There's not really too much
Yes,
emotions
yes.
involved. There just is all logic right now. So
Mm-hmm.
that's another thing as well. You seem very level-headed. Obviously, you planned for this moment, not I wouldn't say you planned for this tragic to happen. However, in a secure matter, in a logical matter for your family and for yourself and for your well-being, you you secured your situation for times like this to happen, and you could still smoothly sail this crazy wave that's going on. So as we end, can you give some words of encouragement to anybody who's looking to purchase, or anyone in general?
So, words of encouragement: this will pass, this shall pass. Stay calm. Don't feed into the fear. Luck is when preparation meets opportunity. Always be prepared, continue to be prepared, and move forward with anything. Don't let anyone stop you from moving forward what you truly want in life.
That's beautiful, brother. So this shall pass. At the end of the day, it sounds like we are the um, the captain of our ships, and we steer our emotional world. Anything outside of that world we cannot control, so there's no reason to focus on that fear, on that worry. Is it real? Yes.
Hmm.
However, we cannot focus on that. So we can only focus on what's inside of us and our world, right? Not the outer world. So I
Mhm.
appreciate you, man. I just want to say this really quick. Shout out to Jose. He said in regards to financial freedom, his definition is assets can pay for all of your expenses. Well, basically any assets that can pay for all of your expenses is his definition of financial freedom, getting out of the rat race and living paycheck to paycheck. Shout out to him. Him and his brother has quite a few units of apartments of himself, and yeah, man. So I really appreciate you tuning in, John. Your time is definitely valuable, brother. So really quick before we end it off, share all of your information as I will be putting it down in the description below on the link here.
Awesome. So my Instagram is John Does Real Estate, JonDoes Real Estate, and that's the same for my Facebook page. And I work for MOB Residential Lending. If you want to get a pre-qualification, I can send you the link of my actual website to begin that process to help you with a purchase or a refinance.
Awesome. Yeah, so we'll definitely put the link below, as well as I'm sure that link probably has your email and stuff like that. We'll put that there as well. So John, I really appreciate you coming on here, man. I really hope you guys obtain some knowledge from this. As you see, John is definitely in the dirt, getting his share of wealth in this beautiful world that we live in and providing an excellent service. So I highly recommend him to any of my clients who are interested in purchasing a home, or any advice that you need. You can reach out to him as well. Appreciate you guys. Again, Ronnie here, your local realtor from New Jersey. And until the next one, peace.